Paul Guest from Lang LaSalle. Thank you for joining us on the Croisette in Cannes. You've just launched the top 10 issues that you are predicting as an agency for the year ahead in Europe. Could you talk us through them, please?
Very happy to. We've just, as you said, just had our press briefing, looked at what are the top 10 themes that will define how things will look over the next 12 to 18 months. Top 10 exaggerates slightly. It's really 8 major themes defining a new normal, which is an overused term, but what will normal look like as we come out of this, and then what are the exceptions to that? Altogether it's 10, but it's cheating a little bit. How we got it is we spoke to all our country MDs, so these are people with the most property experience across the region in each of the countries that we operate, got together the commonalities of what they said would be the biggest challenges and biggest opportunities, and then defined 8 themes out of that. Firstly, the 2 biggest players that'll dominate the short-term outlook are banks and the government. Firstly, banks, because of the amount of property that they hold. As they start to divest that'll create, or as they start to deal with the loan portfolios they've got, it'll create opportunities in and provide supply to the industry. So on one front, and as interest rates rise, they will have to deal with it. The idea of extend and pretend, which if you're familiar with the concept dominated last year, will come to an end this year. They'll start to have to actually look at each asset and deal with their loans. Secondly, the government has put a massive amount of money into the economy to prevent a worse recession. They're going to have to start looking at those costs. So not only are they looking to rationalize their own real estate footprint, they'll be cutting back on costs. That'll have an impact on the economy and so forth. That'll create advisory and divestment opportunities for the property industry.
So those 2 on their own are already 2 pretty big variables for the industry. Very
much so, and that's only the top 2 of the 8 that I was going to talk about. But I think those are where the biggest short-term opportunities lie. Third idea is around the changing face of players. We've got new players entering the market. We've got some that have unfortunately disappeared over the past year or more. Their requirements will change. Cash is still king, but what will define a successful manager going forward are those who've retained the trust of their clients and those who are willing to get their hands dirty in terms of asset management. So new players will emerge, old ones will reformulate their strategy or cease to exist or consolidate. So new players, new requirements dominating the field, number 3. Number 4 is the idea around development. Development financing still largely unavailable. That's going to create supply shortages in some markets. People are going to have to compete for access to assets. And some brave developers, whether equity rich or with some sort of backing, will be able to develop into that gap, creating opportunities there. Fifthly is the issue of globalization. The spread of, the shift of economic and financial power. We actually think that will create more opportunity than risk for European commercial property markets for a couple of reasons. Opportunities to invest here. Savings continue to exceed investment across the world. So the idea that they're looking for quality financial assets, but also more rapid growth in the so-called high growth, high potential markets. And this is Brazil, India, China, but also established markets like Australia and Canada. European investors will seek higher returns there. They can reinvest some of that at home here at the same time that those people are looking to invest here. So more opportunity than risk for Europe. Next idea, number 6, is the issue of regulation. We do believe that there will be more regulation, but certainly over the past 18 months, regulators have not focused on real estate financing. We think they've got bigger fish to fry, and even as regulation does come in, it'll be on things like capital adequacy or loan ratios. It will tangentially affect real estate financing, but we don't think it'll be adversely, and nor do we think real estate financing will be a specific focus of the regulators, at least over the next 12 to 18 months. Fifth issue is the issue of pricing. 2005 to 2007, all markets were going up. Pricing was a major determinant. Now we have markets that are frozen. Liquid or illiquid markets, or the access to liquidity, debt, is what will define pricing going forward. So in some markets we will be able to achieve debt that will push prices down. In other markets, because of the nature of the market or the nature of the assets, there won't be any access to debt. Those markets will remain very sluggish, if not directly frozen. So idea number 8, landlord and tenant balance. Last but not least, the balance of power has been in the hands of tenants for the last 18 months, but for various financial and economic reasons, they've been unable to transact or very slow to transact. So they've had the balance of power, but their window of opportunity is shrinking. I mentioned earlier, development was constrained. We're heading into a slower economic growth, slower employment growth environment. We believe that it is churn or management of existing portfolios that'll drive take-up. not net new growth or new demand for space. So they will be looking, but they'll be looking to rationalize their existing portfolio, not take on a lot of new space.
So all in all, there's quite a lot of problems to address there for the industry in those first 8 points.
I'd call them challenges, personally, challenges. But I guess what we look at when we're talking, if those 8 things define the new normal, then in diversity or in challenge lies opportunity. So if you're an investor, a developer, or an occupier, there's a lot of challenges, but what that gives you is the opportunity to identify pricing mismatches, supply mismatches, and out of that, some people will make an awful lot of money out of this.